Welcome to Bears in Exile. Today is Wednesday, February 22nd, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, the NASDAQ, XLF, GE, XOI, and anyways, we had some technical difficulties yesterday, unfortunately, and the video program decided to crap out, so we're here trying this out with a new one. Hopefully it'll be just as good. And already I can tell that it's not. Alright. Starting off with the Dow. Yesterday we had a spinning top. No video to observe that. Ending today with almost a spinning top. Fat body. But bearish engulfing. We do not have a down tick. We have a side tick. 14-day RSI moving average ticking down, stochastics mixed, pointing up, pointing down, down on the CCI, down on the RSI, down on the histogram, down on the MACD. At first glance, it looks pretty decent. So, not too shabby on the Dow. We do need a confirming close below the short-term moving averages to give us the indication that it is going to actually do its thing and fall apart, or at least go back for a bar retest. I realize that is giving up all this movement inside of the short-term moving averages, but that's for really aggressive players. And without a downtick, maybe not a good idea to actually go ahead and do that. I like to play for fun with little small positions until something is confirmed, and so I'll be crazy and actually go ahead and do that. SPX. Spinning top from yesterday, no video. Today we have a nicer candle than the Dow. It is not bearish engulfing, unlike the Dow, but we do have a down tick giving us a target just shy of 1350. 14-day RSI moving average ticking down, half the stochastics ticking down, CCI ticking down, RSI ticking down, getting the bearish cross on the MACD, MACD histogram ticking down. Is this one going to be for real? Well, it looks nice at first glance, but until we get below the short-term moving averages, who knows? Certainly there should be some fight here at these lower levels that we recently had. Going on to the NASDAQ. We've been saying for a while this one's been holding up the whole market, and it has. And now it is having greater weakness than the Dow and the SPX. Does that mean that it is leading them in the move down? We simply don't know yet. We do have a down tick today. It gives us a target of just shy of 2920. Not a huge move to the downside, but at least it's there. 14-day RSI moving average ticking down. Stochastics mixed. CCI ticking down, RSI ticking down, histogram with the bearish cross ticking down, MACD ticking down. First glance, it looks promising. Moving on to the VIX. Yep, the VIX. How awful. It had gotten above 20, it was doing, decent, and then fell apart, which it did today. Opening almost at 19, not quite, and retreating most of the day. Not very encouraging. 14-day RSI moving average ticking up. Stochastics both crossing the 14-day RSI, which is fine. CCI ticking up, RSI ticking up, histogram ticking down, MACD ticking down. If these want to go down and reset themselves at the bottom, turn around and join the 14-day on the way up, it's fine with me. Certainly that could be what is occurring. Moving average wise, not too pretty. All the short-term moving averages in a flat line and pointing down. Ugh. So like I was saying with the Dow, SPX, and the NASDAQ, they look promising at first glance. The VIX does not confirm the idea of a really good march up, with the exception of the 14-day. Which should win in the end, but currently, with other things moving against it, it is somewhat hindered. XOI. When oil is bullish, market is bullish. I guess except according to the talking heads, except when it gets to extremes. And I don't know if I buy into that, but that's what they say. Yesterday no video, spinning top. Today with a video, spinning top, bearish engulfing, and short-term moving averages pointing up. We do not have a downtick to work with. 14-day RSI moving average still ticking up. Stochastic still in the upright position with the exception of the fast, although it is still above the 80 also. Side tick on the CCI, slight downtick on the RSI, side tick on the MACD histogram, side tick on the MACD. Very, very mixed. Very, very mixed. TNA. Much more like the NASDAQ than the Dow or the S&P. We have resolved the downtick that we got back here. That is finito. We did get a close below all of the short-term moving averages. That is something. So the question at this point becomes, are we going in for a bar retest, which would coincide with a retest of the 200-day moving average, which we've been saying this entire time is completely natural and in fact encouraged, because a retest of it and a bounce off would be an extremely good sign. And of course, if it breaks to the downside, that is a very bad sign. In either case, we can use it. It is much more difficult to use this sideways nonsense that we currently have, which is ugly and not fun. 14-day RSI moving average ticking down, stochastics ticking down, CCI ticking down, RSI ticking down, histogram ticking down, and the MACD ticking down. I like it. I like it closing below the short-term moving averages, and hopefully we won't get blown out of the water with some big ugly greenie like this one back here. But the difference being that it closed above the lowest short-term moving average. So, promising at first glance, not confirmed by the VIX. Okay, well, how about some currencies? UUP. Yeah. Not especially attractive. Yes, it's above the middle Bollinger Band line. It does have that going for it. You know, is this an inverse hammer? Is this a little shooting star? It's not an attractive candle, that's for sure. But we don't have long-term moving averages in any kind of strength to really oppose it. This is a flat line. Short-term moving averages, this is a flat line. If they converge together, we'll have a double flat line. That will not be a good thing. 14-day RSI moving average ticking up, stochastics ticking down, CCI ticking up, RSI ticking up, histogram slight tick down, MACD slight tick up. So very, very mixed. Can go either way. It would be nice to see the stochastics reset themselves to the bottom and join up with 14-day to do its move to the upside. That will be bad for the markets, and but we do not have confirmation or even a really good signal one way or the other at this moment. Gotta be fair. FXE. Ooh, look at that. Little either super miniaturized spinning top or a doji star, depending on how close to it you get. It is above the upper price consensus level, which it did back away from today. This will be 2 days in a row. Short-term moving averages are trying to reassert themselves, pointing back up to the upside and going against the long-term moving average bearish bar. We've been talking about it getting stuck in here and denouncing into a double flat line. This is of course still very early for that, but the potential for this to be sucked back into the long-term moving averages is pretty good. I mean, you have a high here, you have a potential lower high here. Is it going to go back in here and either get a lower low or a higher low, in which case it'll get stuck back in here and once again turn into potentially a double flat line. Uptick on the 14-day RSI moving average, uptick on the stochastics, downtick on the CCI, down on the RSI, up on the MACD bullish cross, and up on the MACD histogram. Just kind of interesting that with all these things pointing up and only a few dissenting, that it is stuck with this little crappy little candle. Not exactly a good sign. Although it should not just be off and running because of the long-term moving average bar here. Okay, well, how about something else? How about GE? Get a read on the Dow. Oh, look at that. Big, pretty hanging man. Yeah, the short-term moving averages are pointing up, but 14-day RSI moving average stalling out, stochastics pointing up, CCI pointing down, RSI pointing down, histogram ticking up, and the MACD also ticking up, looking for a bullish cross. So very mixed, not really helpful one way or the other, unfortunately. How about Apple? Ending with a little doji star, short-term moving averages pointing up, 14-day RSI moving average ticking up, stochastics up, down on the CCI, down on the RSI, sideways on the MACD, down on the MACD histogram, very mixed. Not a good candle for saying one thing or the other, indecision. Is it going to try for another run at the top? That would be fine. If we could get a double top right there and fail, that would be great for bears. The Nasdaq would not take kindly to that. GLD. Well, the dollar is sort of, but not really up. I mean, slightly. The VIX isn't indicating that fear is doing great at the moment. What does our second VIX say? Well, it says it's up huge. Closed outside of the upper Bollinger Band. Short-term moving averages pointing up. We have all kinds of wobble in here. 14-day RSI moving average ticking down. Stochastics ticking up. CCI ticking up. RSI ticking up. Histogram ticking up. Bullish cross on the MACD. Is fear increasing? I think that it is, and it's just not reflected in the VIX yet. SLV, same but muted, not so big, not above the upper Bollinger Band, getting to it and backing off slightly, down on the 14-day RSI, up on the stochastics, sideways on the CCI, down on the RSI, up on the MACD, up on the MACD histogram, very similar to gold, poor man's gold. Maybe we'll even call it the third VIX at some point in time. XLF financials, you don't have a rally without the financials. You don't have a real rally without the financials. No video yesterday, spinning top. Video today, very nice red bar, down tick, resolved intraday. So this is fixed. Whatever was here to fix is fixed. The question is, are we going to go a little bit lower and have the cross of the middle Bollinger Band? It is entirely possible. 14-day RSI moving average ticking down, stochastics ticking down on the fast, not on the slow, down on the CCI, down on the RSI, down on the MACD, down on the MACD histogram. Not bad. So, like I was saying, at first glance, many things look like, and have looked like, in complete honesty, maybe it's time. Well, it's too early to say if it's time, but maybe it's time. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. And hopefully this video will turn out good. Guess we'll see what happens when it's encoded. Alright, have a nice evening.